All right, good afternoon, everybody. This is the video that I told you guys that I will be making in order for you guys to be able to know which side that you want to be on in the market, as far as the market being in alignment, is if price is continuing to the upside, if it's continuing to the downside, or if it's in a ranging market. So if you are ranging, then you can identify, okay, how is the market ranging today? Okay, this is applicable whether it's the stocks, whether it's futures, Forex, or whatever. Okay, so simple things you're going to do. I already have mine up because it's in my toolbox, but you can click on this tool right here and you want to get your Fibonacci retracement tool. Okay, I'm sure a lot of you guys may know about Fibonacci retracement tools, but if you don't, for this process, right, it really doesn't honestly matter on your settings. Okay. So you click on your Fibonacci retracement tool. I'm just going to go back and give you guys a couple different scenarios. So let's start with if you have price. We'll just say, like, we'll go back to this one right here, right? So you want to take your Fibonacci retracement tool. A lot of times you are supposed to go a certain direction, bottom to top, top to bottom, depending upon the situation. In this case scenario here, we're just honestly going to be focusing on a few different levels. Okay, I'm going to enter replay mode and just show you guys how you can utilize this tool to know if the market is ranging, or to be able to look for mean reversion plays also as well. Okay, you're going to grab your horizontal ray up here, or if you have it, it will be in this toolbox right here over to our left. Okay, and you just click on trend line tools, and then you will click on horizontal ray. I like mine in orange, and basically all you're doing is you're going to drop your horizontal ray at your 1, which that basically is 100%. Okay, you're going to take your next one and you're going to drop it at right here at 50%. And well, actually, my apologies, let me move that because that's not actually how I do it, right? You're going to drop your other one at 0, right? So when you have your Fibonacci tool, you should see you want your 0, you want your 2, 3, 6, you want your 50%, you want your 7, 8, 6, right? So if you have to go in there because they're not showing up, then you go into your, that's on the horizontal, right? Sorry about that. Yep, you go into your settings on your Fib tool and you click 0, you click your 1, your 2, 6, your 5, and your 0, 7, 8, 6, right? Everything else should be off, okay? And after that, typically what I do is I go in here, and this is your horizontal line, okay? I just like to have a line there, so then that way I know what point that is. After that, then I take everything off as far as my Fibonacci retracement tool. And from that point, then we drop down to our lower time frames, okay? So on our lower time frame, which we will find here, is we have all our lines. We have our 100%, we have our 50%, and then we also have our 0 line, right? So then that way we know if we're going short for puts, or shorts or puts, long or calls, or if we're just going, mean reverting from the top to the midpoint, or the midpoint to the bottom, or if we have our breakout zones. So as we go back, I think this was the next day. So yeah, we should be here. Okay, let me do this replay mode back just a little bit more, and we'll end it right here at the market close. All right. So what we have here, which you also seen as I was putting everything together, right? We had your Asian session, we had your London session, and if you notice, right, once price came and broke our London highs, right, they broke our London highs, which were our right here, and then also broke previous day high, right? It broke above previous day high, rejected off of London highs, and then it started to pull back into the previous day's range, okay? Once the market opened, we had our fail 2 right here. Price pushed up. It tried to get over London's range again, rejected, pushed back down. And once price pushed back down, now we find ourselves in a range, right? Once it rejected here on IWM, It pulled back up. We already know we had our rejection off of London highs, and it's also rejecting previous day highs. Then you can expect mean reversion back down to the mean, right? And you'll see it came back down here to this fair value gap, right? Right above the 50% mark. And then that's when we had our rejection right here off of, which was set for the New York session low, okay? And when you find IWM, especially, right, have these type of moves, right, then you can expect where you will see the rejection off of the near 50% level, right? And then what does it do after that? It goes right back to attack the previous day's high, right? After it attacks the previous day high and it fails again because it's basically caught in the range of market, then you see it slowly starts to create your inside bars, your directional bars. It breaks right exactly off of the previous day's high and then falls back right down, going back towards the mean. Now, we don't know if it will go exactly back to the zero line, but that's how you find yourself in a ranging market, okay? Now, that is the example for how you find yourself in a ranging market. So let me go to our daily, and what we will do is we will also show you how we find ourselves when prices liking to expand. Okay, so same thing. I'm gonna drop our Fibonacci tool, and like I said, all we're doing is, and we can just move our lines from day to day as need be, and we grab our lines and we drop it down to the lower levels. And you know, you can do this at nighttime, right? So after the market is closed for the day and you have your daily bar, you know, I like it best just to get it out the way. So then that way you're not worrying about this stuff in the morning if you're watching specific tickers or if you're just trading futures. And then that way, once you just get up and if you're eyeing a stock or you eye specific stocks or something that you may have seen, then that way you can just get up in the morning and then you can already have everything lined out and know what it is that you're looking for. Okay, so with this situation right here, okay, we pull back into our area, and so what we find is that on this day, right, we had expansion. So price came, it wicked exactly off the 50% level of the previous day's range, right, at 9:30. And then what happened? That was our New York sessions low that was created right there, and price started to gravitate up, right? It wicked exactly off of previous day's high. It retraced, it pulled back down. It was a fair value gap that was here that it got, sorry about that, caught a little brain freeze. It got sold off into it, which it deleted this fair value gap that would have been here, okay? And then it bounced, failed to, and then started to push back up, kind of teeter-tottered around a little bit, and then once it finally broke above the previous day high here, then we found acceptance out of this area. So once we found acceptance out of this area around about 1 p.m., then it continued to rotate more from the upside from 153.54 all the way up to 256. Okay, so that's how you can find your expansion moves, is once you find price actually close above that daily level and then continue to move up. Okay, so that's how you can find expansions for the upside. I'll just give you another case scenario. Like I said, this is applicable all across whatever markets that it is that you're deciding to trade. Okay. Same thing here. I'll give you instead of just giving you a flat example where it kind of did it in the beginning of the day, I'll give you one. I'm going to pull price back here. Okay. And give you this example here. And like I said, this all applies for whatever market that you're in. So that way, if you already have everything kind of mapped out, then you kind of can tell what exactly is going on as far as, are we ranging? Are we rejecting previous days highs, previous days lows, just by having all this stuff already mapped out for you from the prior day, instead of getting up and kind of rushing and everything else. If it's certain tickets you like to watch, then you can just move this stuff around, drag out your Fibonacci tool and just move the stuff around day by day and just keep moving it. So that main thing is that you can find the 50%. I mean, we already know where the high is, where the low is, but just making sure that we got that 50% all the way down to a T. And then here we go once again, and we find ourselves that once market opened up, right, we find that price came rejected off of London sessions high, right, and 9:15 we already broke back into the zone, which let us know that we were rejecting the previous day's highs. Actually, sorry about that. That is the 50% level, right? My apologies. I wonder where did this other, oh, that's why. Sorry about that, guys. I did not remove the Fibonacci retracement tool. That's why you always got to remove those tools out the way. Yep, so it broke back to the downside of the 50% level. So here, then we know that price could possibly end up ranging between the 50% and the low of the previous day's low. So as soon as IWM opened up, right, it wicked up into the fair value gap, it dropped, sell off, and then you can look to target the previous day's low in situations like this, right? We got here, we did find a little bit of fight. The next bar opened up, we broke previous day's low, we got our close. But then what did it turn into? It turned into a ranging market after it tried to get back up. They did not accept price back into that zone. So what did it do? Push back down, found support in this fair value gap, push back up, push back down, and then now you see you kind of consolidated between the New York sessions low and the previous day's low, right? So this is just all just chopped back and forth and stuff like that. So if you missed this move, right, then you just pretty much kind of got tossed around back and forth and stuff like that, ranging in about $1 or so range for the rest of the day, from 253 down to 251.98, which, like I said, your cons would have just got obliterated if you were trading 0DT or anything else. But like I said, this goes and applies to whichever that you want to trade, whether it's stocks, whether it's options or futures or forex or whatever. These are just ways that you can already have kind of a predetermined idea of its price being accepted and we are entering a price discovery type of situation, or if it's just ranging back and forth by just using your Fibonacci retracement tool, a couple horizontal rays, and then also one horizontal line for the 50%, and knowing if it's ranging between the 50 and the low, the 50 and the high, or are we entering price discovery and possibly, finding new areas where price may be rejected or accepted. Okay. I hope this video was helpful to you guys to be able to identify whether we're in a range and market versus just kind of not having things, laid out for you through your journey. Like I said, hope you guys enjoyed this video. Thank you, and I'll see you guys later.